Hello. This is Bennett Tchaikovsky, also known as the accounting professor. We're going to take a look here today and continue with our journey with financial statement analysis, and we're going to be taking a look at trailing 12 months. So my disclaimer and copyright notice, the information and opinions in this presentation are those of myself and not my employers or other organizations, including but not limited to Irvine Valley College in the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal, accounting, or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. So talking about trailing 12 months, and when we look at this, oftentimes what you'll go through and see is with, if I say like Meta stock price, and you'll sometimes see over here with the price to earnings ratio. Let's see if I can find a little bit more of a detailed view. You'll see right over here with the price to earnings ratio is that you'll see something here where it says PE ratio TTM. What this TTM refers to is trailing 12 months. Now, why exactly is this? Well, if we go to sec.gov and we take a look at Meta platforms, what we're going to go ahead and notice is, well, since filing their 10K, Meta Platforms has filed 2 quarterly reports. They filed one on July 31st and they filed one on May 1st. So if we look at a metric such as the price to earnings ratio or the earnings per share, well, if I just use the December 31st numbers, because Meta Platforms has a December 31st year end, if I use these numbers in terms of going through and computing the price to earnings ratio, as well as the earnings per share, the numbers are, we would call, somewhat stale. So the concept and what I mean by stale is that it's not going to be the most recent numbers. If the company had a great quarter, it's something that we would want to kind of go through and go through and focus on. So the trailing 12 months, because they're giving us a more accurate and up-to-date of the company's performance over the most recent 12-month period. So instead of just taking the year-end numbers, what we're really going to start going through and doing is look at things quarter by quarter. So why is it, trailing 12 months incorporates the most recent financial quarters, ensuring that the analysis reflects the company's latest results, trends, or changes. And this can be really important for us as when we're forecasting future performance. And also too, if for companies with seasonal business cycles, retail during the holidays, trailing 12 months can eliminate the distortion of a single quarter's results, including it for a 12-month period. Comparability allows analysts to compare companies on basically apples to apples, meaning that if one company has a year end of June 30th, another one has a financial year end of, say, December 31st, it's more comparable if we use trailing 12 months. And again, it can also be useful for forecasting. And you can sometimes see this like, these eliminate transitory or one-time items. We'll see how that works out. But in any event, let's go ahead and start building our trailing 12 months. And we're going to go ahead and use a real example. And we'll go ahead and start with Five Below, which is the company I'm doing now. If you're taking one of my classes, you do not have to do anything for Five Below. For example, if you're in my fall 2025 financial statement analysis class, and you're looking over here at the summary that I'm giving, this is showing over here as of 2/1/25, and this is for my sample. I'm doing these samples so that you can see how to go through and do the work. For example, if you're in my fall 2025 financial statement analysis class, you'll be looking at Dollar General and then Dollar Tree. So you're going to be making columns for those 2 particular companies. You do not need to do it for Five Below. If you're in one of my other classes and you're doing financial statement analysis, you'll be doing it for your own companies, your 2 comparable companies. But again, the purpose of doing this is probably, again, one of the most important projects that I can give you to do, because you're actually getting real exposure to different financial statement numbers. So let's go ahead and take a look at 5 below. And so when we come over here, we're going to go ahead and basically pull up 5. So what I'm going to go ahead and do is I'm going to basically start with the quarterly report. And if you've seen me do this before, what used to be nice is that the SEC would allow me to download Microsoft Excel files, but we're not there anymore. So instead, what I have to go here and do is go to interactive data. When I go to interactive data, I'm going to go ahead and click on financial statements. And what I'm going to go ahead and do is I'm going to go ahead and go to consolidated statements of operations. And what I'm going to be focusing on here is basically going to be the 3 months ended. I'll go ahead and just pull this information over here. Okay, so we got over here. We'll start with this. Perfect. Okay. So when I'm going ahead and doing this, if I look at these results here, so this is going to be the 3 months ended August 2nd, 2025, and then the 3 months ended August 3rd, 2024. Ultimately, what I'm trying to kind of go through and build is that I'm looking here at the 5's income statements. They have a February 1st year end. So what I'm going to try to do, and let's go ahead and make our lives a little bit easier. We'll just go ahead and get rid of this. Okay. So when I'm doing the trailing 12 months, right, my most recent data here, and again, it's going to depend on your company, is August 2nd, 2025. And so what I'm trying to do is this is going to be the 3 months ended. I'm going to have the 3 months ended as well. If I come over here, if I go to June 5th, I can also have the 3 months ended. This would be February 1st. And then I can also have the 3 months ended December 5th. Oh, excuse me. So August 2nd, May 3rd, February 1st. Sure, I got that. Sorry, not June 5th. That was the date of the filing. It's May 3rd. Okay, and I'm going to have February 1st. And then I'm going to have 11/2/24. And likewise, what I'm also going to be going through and doing as well is that I've got August 3rd, 2024. I'm going to have 5/3/24. I'm also going to have, and the dates might be slightly off just depending on when the year end is. This is going to be over here for the income statement. This is going to be 2/3/24. And then we're going to have over here, this is going to be 11/2/23. So what I'm really trying to go through and do is to be building my trailing 12 months. So I've got 2 of these months, and how did I get these months? Well, if I look at the filing itself, when you look at a quarterly report, essentially what you're going to go through and see is you're going to see basically you're going to go ahead and see balance sheets. Now, when you see a balance sheet on a company, it's going to be, and we're not concerned with that, but when you have a quarterly report, the quarterly reports they're reviewed. They are not audited. So one of the things you're going to notice here is it's going to say clearly, it's going to say unaudited. This is their second quarterly report. So when Five Below goes through and reports quarterly, they're going to be showing the most recent quarter as well as the 6 months ended as well. So this is their second quarterly report. So they're going to basically show us the most recent quarter as well as the year to date, which for this is going to happen to be for 6 months. If I went over here to this filing on June 5th, what I would notice here is that for this particular, basically for this particular one, is that we just see the 3 months. And why is that? Why don't we see the 6 months? Well, it's their first quarterly report, so we're just showing our results basically year to date. So what I'm going to try to go through and do here is to kind of go through and build my snowman, right? So I'm going to pull this from the first quarterly report right over here. And then this is going to give me May 4th, 24. Right over here. Now, what's interesting is that I pulled up the 6 months ended August 2nd, 2025, and then the 6 months ended August 3rd, 2024. If you notice the relationship between these, if I add up the first and then the first quarter and then the second quarter right over here, I get this 1997, 374, or the 6 months ended. If I add up the 830.69 plus the 811.863, I'm getting the total revenues for the 6 months ended over here. So just kind of like little things, like there's other ways I could have gone through and backed into things, but this is how we're going through and doing it. Okay, so let's go ahead and grab ourselves some more data. So when I look over here at February 1st, I kind of have like a little bit, well, let's go ahead and go to November 1st. Let's get the easy numbers first. So I'm going to come back over here to this, and I'm going to go to November 2nd, 2024. I'm going to click on filing. I'm going to click on over here to interactive data. And I'm going to click on financial statements, consolidated statements of operations. Remember, if you see something that says comprehensive income and you're taking my class, just go ahead and ignore it. Okay. So right over here, I love how things, when they don't work out, it gives us an opportunity. Okay. There we go. Let's try this again. See if we can get it to copy and paste appropriately. Ah, there we go. How nice. Okay. So over here, we basically have basically the 3 months ended. Actually, no, I just pulled up the same one, but you're a fool. Okay, let's go ahead and put this over here. Hold on. This is what I wanted. Right here. Okay. I wanted the 9 months ended. Okay. And it's still doing that. Just give me a moment. Okay, so it didn't really like, for whatever reason, may have been when it went through and transitioned, as far as like, I'm sure someone else can help me out here with, so this is going to be 3 months ended and then the 9 months ended. So here's what I'm kind of going through and doing, is just kind of doing a little cutting and pasting, right? So this is going to be 3 months, 3 months, and then 9 months, and then 9 months. Okay. So right over here, sure those of you that use Excel or Google Sheets are saying to yourself, Bennett, there's plenty of better ways to do that. And I agree with you. I need to take the Excel courses at Irvine Valley College with Professor Kasoy or Professor Mather to really learn Excel better. But I do know that whenever Carolina has observed me as my peer observer, I provided her with plenty of entertainment. Okay, so let's see if this will work over here. And there we go. Okay. So now I basically put this in 3-month types of forms. So I'm going to come over here and basically say, okay, over here for the 3 months ended 9/2/24. And let's go ahead and say, just want to make sure this is going to line up. Just go ahead and do this down here. There we go. And then we're going to go ahead and do the same thing, basically over here as of 10/28/23. Okay. So what I've effectively have gone through and I have done is I've basically taken the information that is in those quarterly reports and I've effectively basically put them in over here to into my sheet. I don't need this information here because this is 6 months information. And over here, this is just information that I was using to go through and to copy and paste. But what I do need, though, is I need the information for the 3 months ended February 1st, 2025. And I also need it for the February 3rd, 2024. Now, with these particular numbers, this is the end of the year. This was basically their audited financial statements. And so when you see this, you're traditionally going to go ahead and say, well, this is for the 12 months ended. So what we're going to try to go ahead and do is we're going to kind of say, well, over here, this is basically 12 months. And if I look at it like this, so this is my 12 months, February 1st, 2025. I'll put it on the sheet here. And I'm going to try to do this to align up with this here. Okay. Then I'm also going to go here and basically say for my 5 income statement, I'm also going to go ahead and pull this here on this part right up here. And of course, I blew it on that, but we'll go ahead and do this here. Okay, so I got 12 months, February 3rd, 2024. Okay. Now, if I'm looking at this information to figure out the 3 months ended February 1st, 2025, if I take the 9 months basically ended 11/2/24, and I bring this over here, what I can then say is that, oh, well, the quarter here then was 1,390,885 and go down over here to my net income, right? So the 12 months or the year ended February 1st, 2025, which runs from February 3rd or February 4th, 2024 through February 1st, 2025. And if I subtract out the 9 months for 11/2/24, this is going to give me the 3 months or from 11/3/24 to 2/1/25. So this is my value over here for the 3 months. I'm going to go ahead and put this into my trailing 12 months. I also have other videos on this that you may also find helpful. So again, there's a lot of different ways to go through and to do this. Not necessarily any one way is particularly correct. Just do make sure that your numbers work. So if I come down over here, though, And I'm now going to go ahead and say, well, if this is my 9 months, 10, 28, 23, then my 3 months from 10, 29, 23 to 2, 3, 24 must have been over here, 1,377,736, 736, and so on. Note here, I'm leaving out the earnings per share and the diluted and those other calculations. I'm not really concerned with that right now. But when I go ahead and put this in, I'm basically coming up with my quarterly financial statements. Okay. Now, the way I'm going to go through and look at this in terms of my trailing 12 months is I'm going to put up here and say TTM, because now these are all showing in quarterly amounts. And as I look at this value right here, what did I screw up on? Well, I screwed up big time. How did I screw up big time? Well, when I copied these here, I forgot to put in pay special values only, right? I pasted the formula because the formula over here showed H15 minus I15. So I went ahead and basically said, okay, pay special values. I'm going to do the same here. And I'm going to change this to pay special values, and I should be good to go. Okay. So what I'm now going to go through and then do is to go ahead and say, okay, what are my trailing 12 months? Well, it's going to be the total amount of my sales, or going to be over here, 4,231,969. Cost of goods sold, SG&A, depreciation and amortization. It's going to give me my operating income, interest and other income, income before income taxes, and then my bottom line net income. Okay, so over here, we're not going to do the earnings per share quite yet. We'll get to that momentarily. But if I was to go through and to do this, I would be using, I could use like, because the numbers aren't too far off, I could just go ahead and use the per share values down here. So coming over here, my trailing 12 months for the prior year, I'm going to go ahead and do the same thing. And if I had to go through and come up with some earnings per share values, I would go ahead and do this part over here. So now to compute the basic earnings per share on the trailing 12 months, basic income per share is going to be my net income divided by my weighted average shares outstanding. And I forgot that this over here is in millions, or excuse me, in thousands. So I need to basically adjust this by, okay, and then over here, I need to go ahead and basically do the same thing. And if I was doing, I'm not going to worry about the diluted. Over here, I'm going to take this times 1,000 divided by my weighted average shares outstanding. I'm going to get $5.11. Okay, so this is, again, this is for the full year. And if I compare this to, right, my basic income per share for the, just to make sure I'm on the right track, over here for the year ended 2/1/25, my basic income per share was $4.61. It's gone up now in the next, if I'm moving forward by 2 months, to $4.96. And then over here, this was $5.43, and this went down a little bit down to $5.11, but I like to kind of go through and do that just to kind of go through and check my work. Now, again, why are we doing, or why am I spending the time with you in terms of doing trailing 12 months? It is mainly because I want to make sure that when we're going through and doing the market value ratios, especially when it comes to earnings per share, we want to go ahead and be using trailing 12 months. So again, thank you for being here today. Let me see if I have any other disclaimers I can share with you. There we go. Thank you for watching. Please don't forget to like and subscribe. I look forward to seeing you on the next video. Have a great day.